I got asked today, can you use projected rental income for a mortgage application for a holiday let property? And the answer is unequivocally yes. My name's Joe Stallard. I'm a director at House and Holiday Home Mortgages, and let's just take a look into using projected rental income and how that is done in the holiday let world. So to start with, if you are purchasing a property, it will be the way that the majority of lenders are going to assess the rental. With it being a seasonal property, you're probably going to get different rates for different lengths of stays throughout the years. So lenders are going to want to understand from a holiday letting agent, a specialist in the market, in the area or nationally, what the property has the potential to do. It may be that you're buying somewhere that's not been used as a holiday let before, so using that rental income is a really clear way for the lender to understand the potential of the property and therefore what they can let you borrow. The holiday letting agent will give you a rental forecast. It will give you a gross annual expectation as to what that property is going to do. It will also break it down into low, mid and high weekly rates. So it might be the high peak rates in the summer are far superior to what you might get in lower weeks throughout the year, and then each lender will use those slightly differently, and they will average them out, and they will assume some void periods and all of that sort of good stuff that goes into it, but they are absolutely going to use that projected rental income. Now, there are a couple of others who might use a buy-to-let affordability model, even though you're going to be holiday letting the property. So they want to know what the potential monthly rental income is as a buy-to-let. And there are others that might look at using your own income as well while still letting you rent the property out. So there are different ways of doing it, but with a purchase, the most common is that rental forecast. Now, when it comes to a remortgage, what can we do there? This is where all lenders treat things a little bit differently. There are some that will want to use and will only use the actual figures that you've achieved as a holiday let for that property. So, you might have had it a couple of years already. You might have 2 years worth of books or bank statements or rental income statements that can be shown and used, and that will get used by the lender. There are others that, because proving that can be quite hard. It might need 12 months worth of bank statements with you highlighting every particular set of rental income you've got along the way. So that can be quite tricky often, showing what costs are associated with the property and what aren't. So there are others who will use the same forecast letter as we mentioned with the purchase piece. They will understand from a letting agent, be it, you might have a managing agent, or be it you might need to get an agent to get you the forecast. They will work from that set of figures equally on a remortgage as well. So it can be done absolutely more commonly with purchases, but also quite important in remortgages to make sure that you're getting the evidence over to the lender as to what that property can do from a rental perspective. Hope that's been useful. Don't forget to like and subscribe, and if you want to get in touch, feel free to contact us via hhhmortgages.com for a no obligation conversation. Cheers.